Stocks slip after a steady start as hawkish comments from the US Federal Reserve members up the policy uncertainty. Realty and financials lead the decline while IT exhibits some strength.
Oil producers gain as crude gains and windfall taxes are cut, but tax hikes on exports of diesel and aviation turbine fuel aren't good news for refiners.
A move by the regulator POSCO to bar states with overdues from trading on power exchanges gets 6 of them to cough up dues. REC and PTC tell CNBC-TV18 that the crackdown will instill discipline in the sector.
Happiest Minds echoes views of other industry players and analysts in saying that the supply of IT workers is stabilizing. The digital-focused IT services vendor also sees no slowdown in demand.
Good afternoon. Welcome to Halftime Report. I'm Sonia Shenoy. With me is Ekta Batra and Mangala Malu. It is Friday. It's the end of the week. And we have, about 3-4 hours left and we'll be done. That excitement aside, it's not a great day for the bulls. The market is under pressure now. In fact, 150 points lower on the Nifty, 500 points gone on the Sensex. And the steep cut has come just in the last half an hour to 45 odd minutes. I guess there's profit taking after what has been a very strong month, a very strong week. The Nifty, the mid-cap index itself is up about 4-5% for the week. And things have looked good so far. So perhaps, a little bit of profit taking, wouldn't harm anyone. It
wouldn't harm anyone. And Sonia, the bulls were positioning themselves for a range between 17,800 to 18,000 odd. We moved closer to the 18,000 mark, saw some bit of profit taking. Now we're near the 17,800 mark. So let's see whether there would be support out here or not. Because just moments ago, we did kiss that 17,800 mark and then saw a bit of recovery from there. And now we're veering around that. So let's see whether there is some support here or not.
Yes, absolutely. But not to mention, yes, we've given up our week-to-date gains as well. Hopefully, the second half will probably redeem some of that, considering that it's been 8 straight days of gains. So let's see whether we manage to sustain some amount of momentum, at least in the second half. But let's move on to some news then. Our colleague Yash Jain caught up with Yashish Dahiya, who's the MD and CEO of PB Fintech, and began by asking on the company's Q1 earnings. Listen in to that conversation.
So see, the 85% of our revenue is insurance, 15% is credit. And in the insurance industry, JFM is the biggest quarter by far and away. And April, May, June is the weakest quarter. If I look historically over the last 5-6 years, from Q4 to Q1, our premiums and revenues fall by about 11-12%. So it is much lower seasonality than the rest of the industry. The rest of the industry is much steeper than that. So this year was about 6%, which is actually a fairly good performance in our view. When we speak about the growth, Yash, the core business grew about 60%. And I think that's what has to be kind of looked at in earnest, because the rest of the growth is actually coming from non-core growth.
I understand there are 2 segments of business, one where you're trying out new things, one where you established yourself. But together, if we look at the revenue aspect, for FY23, what is the sort of internal target or your understanding in terms of revenue growth for the company?
So, look, last year we did about 1,400 crores. So our internal expectation, and things can always change, is about 2,200 crores.
You spoke about non-core business or new initiatives, as we call it. Do you think the investments in that side of business will continue at a similar aggressive pace that you've been doing in the last 1 year for this financial year also? If yes, then how much could it increase over the previous financial year?
Yeah, so I think we peaked in Q4. So if you look on our new initiatives, we lost about 90 crores in Q4. That was down to 71 crores for this year. And our expectation is for the whole year, it will be below 200. So what that means is the rest of the year should be 130 crores, 129 crores. So what that clearly implies is there's going to be a reduction in the burn on the new initiatives.
Speaking about the 2 businesses, of course, insurance premium generated and the credit dispersal on both sides for FY23, considering the industries have been going strong on both sides, what is the growth that you see for yourself individually in these 2 segments?
So see, we do not really look at industry per se, but when we look at protection, when we look at primarily protection area, We think our growth rate historically has been about 2 to 3 times that of the industry. And I think that would continue. So let's say that in the protection area, the industry grew by 15%, and we should grow at 45. If the industry grows at 10, it might be 30. So it is impacted by the industry, but it's about 2 to 3 times of the industry growth. So I would say as a minimum ballpark, you could take about twice the industry growth. If you're, our internal targets seem to be about 35% growth on the core business.
Your contribution part, which is essentially in simple language, the operational performance, so to say.
Yes.
That in the first quarter grew by about 64%. Do you expect similar momentum on the operational part or the contribution part to continue for this financial year also, similar as Q?
I think our contribution margins in the two separate businesses, so core business will stay about the same as it is. But on the non-core side, of the new initiatives, I expect the margins to improve quite a bit as the year progresses. Next year, I think we should have an improvement in both sides.
Is there any strategy? Is there any timeline in terms of how soon do you expect to turn profitable when it comes to contribution in the new initiative segment?
So, see, we are not commenting on the new initiative side yet, but on the overall business, as things stand, as we look at stuff, I think by the last quarter of this year, we would be adjusted EBITDA positive on the entire business, including new initiatives. And that's what we said on our earnings call as well. However, there is a reason why we are not commenting on when will the new initiatives turn positive, because that to a large extent will depend upon industry dynamics.
What's the target for being PAT positive?
Yeah, PAT positive, I can smell things which I do not have numbers for. My view is it will be sooner than most people expect. Now, the reason I say I can smell things is because the difference you're talking about is just the ESOP cost.
Correct.
By the end of this year, we would have accounted for about 55 to 60% of the ESOP charge that we are going to have over a 4-year period, over a 5-year period.
Okay.
So a bulk of the ESOP charges would be over. Now, after that, if let us say one senior person leaves in the company, I'm just saying, suppose that happens, then what happens? The ESOPs have to be, returned. And if the ESOPs have to be returned, then there could be a, negative cost on that front.
So 55-60% of the cost being absorbed in this financial year, then about 2 or 3 more quarters, let's say in FY24 is when you expect to turn PAT positive by just a simple...
My sense is people expect us to be PAT positive by the end of next year.
Okay.
As in 24.
You'll turn PAT profitable sooner than that. That's what you said.
My point is, it might happen.
Out of your total income that you receive, what portion of that total income comes from commission? What portion comes from marketing? If you could just differentiate that.
We don't differentiate to that extent, but listen, 85% of my revenue as a company, one way or the other, comes in the form of commission.
Yashish, another proposal which the regulator has sort of had a couple of conversations with the industry is to set up an insurance exchange where all products, life, general, standalone health, listed on that exchange members or agents selling these products. Now, the regulator's understanding, and this might be more ambitious, is that it could bring down commissions by 1/10 to what is paid to aggregators or agents or bank assurance. That could be sort of a complete change when it comes to Policybazaar's business.
I think it's a fantastic thing. It'll help the industry grow. As I said, it would solve for the claims and service layer, which is so critical. If the business becomes 10 times and the commission is 1/10, what's the harm?
But the business will go to the exchange. What will come to you?
My point is, let's see how it plays out. But I think it's a great idea.
But do you see this as a threat? I mean, on the face of it, the way it's panning out?
Of course not.
Okay, that's the word coming in from PB Fintech and the outlook on their business. Let's slip into a quick break. A reminder for our viewers, though, it's that time of the year again. Money Control Pro's financial freedom offer is back with added benefits. Get a Money Control Pro subscription at net zero cost by claiming exciting offers worth 1,500 rupees from our partner brands. Grab the benefits now only on the Money Control app or website.
Markets are meandering around the lows of today's trading session, but we do have a bunch of stocks which are doing extremely well, and that belongs to the Adani Group, and all of them are actually, surging. And how we have Adani Ports, which is the top Nifty gainer, and even in the F&O space, we do have a bunch of other Adani Group stocks which are doing well. Adani Enterprises, for instance, as well, had fallen from the top, and now from the lower levels, it is seeing some bit of recovery. Another stock which has hit a fresh 52-week high today is TVS Motors, up almost 56% in this year itself. Sonia explains why this stock is buzzing lately in this special segment, Value Plus.
Yes, so this is a stock that has been hitting highs for a while now. It has been one of the strongest movers in 2022, right? It's up 56% this year. Now, there are multiple triggers because of which the stock is moving up with strength. TVS Motor has been narrowing its profitability gap between its peers. Now, just to give you an example, and Jefferies put out this note earlier this morning, where they said that the average EBITDA per vehicle that TVS Motor enjoys was 2,300 rupees way back in FY10. It's now gone up all the way to 6,400 rupees EBITDA per vehicle is what they earn. And that is just 35% below its peer group, which is Hero as well as Bajaj Auto. So they've narrowed their profitability gap between the peers, and the EBITDA share in its peer group is up from just 6% in FY17 all the way to 13% in FY22. There's also the rising success of TVS Motor in the electric vehicle space with the TVS iQube, which has been doing very well. They're now the number 3 player in the two-wheeler EV market, and they have a 14% market share. In fact, not just electric vehicles, TVS Motor has gained market share across the board. And that's the list for you. In the scooter segment, motorcycle, two-wheeler exports, three-wheeler exports, they've gone up significantly compared to what they were in FY17. Brokerages are also quite bullish across the board. There are target prices of 1,000 plus. In fact, 3 of them on your screen, Jefferies, JP Morgan and UBS, have a target price of anywhere between 1,000 to 1,200. The only problem is that the valuations are now steep compared to peers. So TVS is now trading at 26 times forward FY24 earnings. And if you look at Hero and Bajaj, they're still trading at 15 to 17 times, which is a historic norm. So the valuations are a bit uncomfortable compared to peers. But otherwise, TVS is really making big strides, especially in the electric vehicle space.
Okay, all right, Sonia. Thanks very much for that. In fact, autos has been a good performer on a year-to-date basis. M&M is up over 45%. Eicher Motors has also gained over 30-odd%. Maruti has also gained over 15%. So it seems as though autos is really the flavor of 2022. But let's move on to our other special segment, Unusual Mover. Mangalam is focusing on Go Fashion. Mangalam, tell us more. The stock is up.
It's up in a day where the markets are not doing well, and which is why it came to be our unusual mover. In fact, this week itself, it's up around 10%. This month, up 13-odd%. There are reasons for the stock to be moving, but today's move would perhaps account as unusual. The key reasons are first quarter results were extremely good for them. 5 times growth on the revenue on a low base, and the same store sales growth was 30% over pre-COVID basis. Gross margins, they have a strong brand with regards to the Go leggings, etc. And they've taken price hikes, as a result of which the gross margins, despite inflation, have increased by around 420 basis points. The average selling price has been up by 9% in this quarter. They've added 30 new exclusive brand outlets, total stores at around 533. Why exclusive brand outlets are important for them? One, because the company gets over 70% of their revenues from them, and they account for about 33% of EBITDA margins, as against the other parts of the business, which are not as margin accretive. What is the big trigger for them? Apart from the 130 crore cash that they have, they've started a new warehouse in Bhiwandi, Maharashtra. And we all know that the western region of the country is known as the region for the consumers, because there is a fair amount of consumption that takes place in the western part as against the other parts of the country. And this would add, to their revenue, 120 to 130 new additional stores this year, with improving business metrics. Working capital days down from 190 to 133. We have ad expenses. They will increase them, but despite that, Their margin guidance is at 31-32% versus 30% in the last year, and online sales increasing from 2.5% to 5%. Believe you me, I've never used a Go Fashion's product because they are not for me. They are the largest player in the women's bottom wear category, leggings,
You can always
jeggings.
buy it for your wife.
I can, most definitely, but I mean, it's better that she buys it because my choice in colors may not be approved by her.
I know we've seen your choice in shoes is if it's
So shoes are
with respect
below
to
the leggings.
Okay, but yeah, I mean, Go Fashions is a very popular brand, right?
Very
you go
popular.
out there and you see
very
anyone and
innovative
everyone
as
buy.
well. Very innovative. They keep coming out with new products. Yeah. Okay, anyway, that's on Go Fashion. Stock is doing well, up around 5.5%. But Adani Total Gas is the other stock which is in focus. It's losing in today's trading session. The company has reduced the prices for domestic CNG and PNG. And in fact, we do have Sonal here with us to tell us more. Sonal.
Yes, so Adani Total Gas is in focus because they have cut prices of both CNG and PNG ranging between 3.7 to 4.3 rupees, and this has come in after the government recently announced that they will be increasing domestic gas allocation to the city gas distribution sector. Earlier it was MGL that had cut prices on the back of this, and now it's Adani Total Gas, and the expectation is that the other players will follow suit. The company also says that they have done so because there is a decline in the unified base price as well, which was hovering around levels of $10.2 per MMBTU in the first week of August. They also add on to the point that imported LNG, it is seeing a lot of volatility. The prices have touched a record high. So they are trying to pass on those prices to the customers, not ensuring that it does not hurt demand. But for now, this has come as a relief for the customers. But margins for the company, they will be under pressure because of this. And that's why this decline in the stock price.
Okay, thanks a lot, Sonal, for that. Well, let's do one thing. Let's slip into a quick break. On the other side, Prakash Gaba will be joining in with some trading strategies, so do stay tuned in.
Welcome back. Well, it's been a tough week, you'd have to say, for stocks such as Apollo Hospitals. Remember that it did react to its conference call takeaways as well as from its Q1 FY23 numbers. That stock is down around 2% at this point, and in fact has lost over 3% on a week-to-date basis. If you look at it on a year-to-date basis, it's been a tough performance, tough year for Apollo Hospitals, considering that the street is really waiting and watching what would happen with Apollo 24/7, which is their digital arm, and whether or not they manage to raise funds within that space. So that stock in focus at this point, top loser on the Nifty. Prakash Gaba is with us to tell us what he's tracking on the technicals this afternoon. Hi Prakash, welcome to the show. Well, it's definitely a down day. The Bank Nifty is leading the decline. What would you recommend?
Yes, it's a down day. I was expecting this yesterday. It was a day late. But yes, it has happened. Looks like unless it crosses 17,850 Nifty, it's down. Bank Nifty, 39,300 or 400 is the zone I would look at resistance. To my mind, I think Nifty and Bank Nifty is down because it is stretched too much. I have two stocks, one long, one short. One is persistent, possibly can climb up from here. I would have a stop somewhere below the levels of 3860 and trade long and persistent. We could see levels closer to 3950. So persistence looks good to me. Stock week, I think PVR is a beautiful sell. Stop about 1900, it should be short. Possibly we'll see zones until 1800 or even lower. PVR looks weak to me.
PVR looks weak today to you, Prakash, but you're an eternal movie buff. Over the last few weeks, we haven't seen a movie from our side of the world to be as impressive. What are your thoughts on that?
Well. Yeah, I'm a movie buff only when I get invited. Otherwise, I prefer not to watch movies in the theater.
Oh, so you never contributed to the PVR's revenue over the last few years?
Never.
I think that's been the case so far with a lot of people. Like the trends have just changed post-COVID. People prefer to watch it in the comfort of their homes rather than
the only movie
theaters.
that I did watch was Top Gun in the theater. That deserved to be watched on the big screen. But besides that, I agree with you. There's no point in leaving your house, stopping, pausing. When
it's just like a Marvel movie, like a Thor or Top Gun with action and a lot of
Ajay
stuff
Bijli
happening.
and his ilk not here. Our conversation.
I'm sure he's aware of it by
Yes.
now, the changing trends. But in any case, the stock is on a tear. It has been for a while now. Thanks, Prakash, for joining in. Have a great weekend. A movie or no movie, I'm sure your weekend will be spectacular. Thanks for joining in. Let's get you some market opinion now. Earlier today, we caught up with Sandeep Bhatia of Macquarie Group, who says that China's weakness is not good news for emerging markets, especially emerging market investments. Listen in.
The FII money is coming into India because in some ways there's a structural derating that's happening in China. and the emerging market universe, for very obvious reasons, was dominated by China. It's now getting much narrower. I think longer term, essentially, it's not great for the entire emerging market universe set, because if China becomes uninvestable structurally, then it basically means that, and Korea becomes a developed market and exits. We essentially have just maybe Brazil, Argentina, India, and the emerging market set. So then it's structurally not going to be a great place if you are an EM benchmarked investor. The commodity edge and the pressure on high commodity prices, both on the macro and corporate earnings growth. The belief is that if China really slows down into the second half of this year, we definitely have a better macro position emerging for India. And corporate earnings growth and margins, which were under pressure, would therefore reverse. All this is something which definitely is helping India and the markets. And this money, therefore, I would think is not hot money. It's here for the longer term. And also the sectors that we in Macquarie are positive are in the IT sector and financial sector. And I think the inflows are also coming in both these sectors from FIIs.
For the first time, inflation levels in emerging markets are far lower than that in developed markets like US and Europe. Lata Venkatesh, in fact, caught up with Jitanya Kandhari, the Deputy CIO of Portfolio Solutions and Multi-Asset Group, Head of Macro Research for Emerging Markets at Morgan Stanley. She believes there's a strong case for investing in emerging markets and within emerging markets, particularly for investing in India. Listen in to a fascinating comparison of equity markets on a range of parameters.
I do think that we are at the stage of the market and economic cycle for this asset class where investors will increasingly start looking. Of course, it's a very heterogeneous asset class with 24 countries that are part of this index with different macro and political cycles. But at an aggregated level, I'd say three things that really support the case. One is relative performance, two, relative valuations, and three, the fundamentals. So since 1930, if you look at data, we have seen the worst decade in emerging market returns in the last decade. They had their back against the wall post the global financial crisis, and they have spent the last decade reforming, and they always do when they have their back against the wall. Secondly, the relative valuations, they are at 2000 levels. When you started a commodity cycle post the 1990s recession, recessions and multiple crises in the asset class, valuations are extremely compelling. What's more important is currency valuations. Ex-China, the currency valuations are also back to 2000 levels, and currencies contribute a third to emerging market returns. So that is very bullish. And then fundamentals, as you said, inflation in emerging markets is not a demand-led structural problem. Wages are not an issue for inflation like the US. The supply-related issues, which have the food, energy prices, or the supply disruptions, that have caused inflation to peak now, actually peaking in some of these markets. And more importantly, the central banks have been way ahead of the curve. For example, central banks like Brazil have raised rates by 1,100 basis points since 2021, the last quarter, when US was not even talking about tightening. So they've been preemptive. Demand is clearly picking up post the vaccination and the opening up of these economies. And I'd say the four structural drivers are reform momentum, the commodity cycle, which supports some markets, digitization, which is a big growth driver in many emerging markets, and manufacturing because of the supply chain diversion that's happening in the geopolitical world where China is in focus.
Jitanya, within the emerging market basket, what's the case for India first?
I want to say this, that I'm really very positive on India, again, at a relative level. So I'd say a few things happening. India has never been a manufacturing story, right? It missed the manufacturing bus. When China joined the WTO, China was the manufacturing economy that lifted a lot of the emerging market boats with it. But India has been services driven. That's a large part of the exports. So this time I'm beginning to see some signs of a manufacturing pickup in the supply chain, with the supply chain diversion. I hear it anecdotally in pharmaceuticals, in Apple setting up facilities here, in chemicals, etc. So I'm hoping that the long-awaited manufacturing pickup will happen. Most importantly, I find the credit cycle looking extremely interesting. So if I look at the Indian consumer, I look at the Indian corporate, and if I look at just whether it's the government, the banking sector, there has been a deleveraging that's happened. So the last 10 years, private credit to GDP in India has actually degrown. In China, that number is 65% up. So credit has grown in excess of GDP by 65%, as an example. There has been a cleanup. Banks look very well capitalized. If I look at real estate developers' balance sheet, gearing is down. The affordability for the consumer is looking extremely compelling, even in the real estate space. Price-income ratios, which is a gauge of affordability across different markets, that's down to 3.2 versus, say, a 6.7, actually one of the lowest in the world.
To the income.
Yeah, relative to the average income of an Indian household. So look at a lot of these metrics. I feel at the banking sector level, at the corporate level, and at the consumer level, I find a lot of positive developments that will help initiate a credit cycle. And a credit cycle is always important for a growth cycle to take hold. Demographics, etc., we know are clearly compelling, though the world is on a depopulation, degrowing kind of trend. But relatively, again, India stacks up. So I do, reforms which have been initiated by the Modi government once, at one point even we were skeptical, but we're beginning to see the fruits of those reforms, whether it's the unique identification number, how the digital penetration is spreading, and how these reforms are actually supporting the whole momentum on the growth side. So, looking at all of these things, as I mentioned, the reform cycle, the digitization, just the recovery post-pandemic, the credit situation, I have longed to see investment to GDP pick up in India because, again, that is the killer app for growth.
That's not picking up.
And if that picks up, it would be great. But nothing happens in India in a straight line. It's always incremental. And I'm just seeing the delta of that incremental change getting positive.
Okay, so the delta of incremental change is getting positive in India. That's the word coming in. We need to take a short break, but up next, Nitin Khara, the chairman and CMD of Confidence Petro, will be joining in to chat about his business on the other side.
Welcome back. A move by regulator POSCO to bar states with overdues from trading on power exchanges gets 6 of them to cough up the dues. REC and PTC tell CNBC-TV18 that the crackdown will instill discipline in the sector. Abhimanyu joins in with more details of the same. Abhimanyu.
Well, clearly DISCOMs, which were being earlier barred from participating in power exchanges, many of them have been allowed. So it's a gradual sign of the crisis be easing out. It's not the first time that DISCOMs or states were barred. However, it's quite rare that such a large number of states which were affected, as many as 13. As of now, Chhattisgarh, Maharashtra, Andhra Pradesh, Bihar, Jharkhand and Manipur have been allowed to trade on power exchanges. What CNBC-TV18 had learned that other 7 states are also trying to clear their dues, and what industry experts have told CNBC-TV18 till now is that such decisions will bring in much needed discipline in the market, and the outstanding amount is mostly areas and not what they need to pay exchanges. Earlier, this order which was issued, it had essentially barred 13 states from participating in power exchanges as per the rules framed by the Union Power Ministry, which barred DISCOMs from participation in power exchanges. over pending dues to Gencos. 13 states were affected who have a total pending dues of state discoms to Gencos at rupees 5,085 crores. So clearly, various states have already started paying their dues and have already been allowed to join the power exchanges. It remains to be seen how early the remainder of the dues will be paid. However, the legacy issue still remains, and it remains to be seen till what extent that is going to be resolved by the government. The government, of course, is coming out with various legislations, be it the Energy Conservation Bill or the Electricity Amendment Bill, but clearly it remains to be seen how early these issues are going to be resolved and whether discoms are going to fall in line and ensure that there is no repeat of this incident.
Okay. All right, Abhimanyu, thanks very much for that. So that story continues from yesterday. But just wanted to put the spotlight on one particular stock. Just pull up Repco Home Finance. It's been one of the rank outperformers from the broader markets this week. It's gained 15% today. But just look at the move on a week-to-date basis. The street seems to be extremely positive on the numbers, on the company post the Q1 numbers. That stock is up around 50% on a week-to-date basis and now sitting with just a cut of around 10 to 11% on a year-to-date basis. So just watch out for Repco Home Finance and a couple of these media-related stocks. So Eros International is higher in today's trading session. There's Z Media, which is up around 3% and there is some amount of traction in a couple of these other counters, such as Balaji Tele from the broader markets. That stock too is up around 4%. But let's now cut across to our managing editor, Shireen Ban, who is in conversation with Shantanu Narayan, the chairman and CEO of Adobe. Okay, we'll get to that conversation in just a bit.
But
what
for now,
are you tracking?
the market has come off quite a bit, you know.
Yep.
So it's the mid-cap index is now down almost 300 points, and it's not a small amount. I mean, it's sort of wiped out all of its gains for the week. But let's cut back across to our managing editor, Shireen Ban. Shireen, over to you.
Welcome to Global Dialogue. I'm Shireen Ban, and today we're joined by the global CEO of Adobe here at their headquarters in India. Joining me today is Shantanu Narayan. Shantanu, thanks so much for joining us, and it's great to have you back here on CNBC-TV18 and in person.
It's always a pleasure to be on your show, Shireen. Thanks for having me.
You know, Shantanu, let me start by asking you about your view of the world. It is an increasingly uncertain time, not just because of the geopolitical tensions that we're seeing, but inflation, the central bank action, and several pressure points that CEOs have their eye on. As you look at the world today, what are you most concerned about? What are you most confident about?
Well, I think first in my role, if I'm not optimistic, you know, I'm in the wrong role. So overall, I just continue to be optimistic about what's happening. I think the world has gone through these phases. The first unprecedented phase of what happened with the pandemic was certainly, you know, where people said, let's make sure we focus on health and safety of people. I think the war in Ukraine has certainly, you know, been another one of these geopolitical shocks. But I think as it relates to Adobe, the irony is, you know, whether you're not able to be somewhere in person, digital has become a more important part of everybody's strategy. So, you know, I mean, I think in the long run, the consumer sentiment still seems to be fairly positive. And businesses, I think, are thinking about how they use digital to navigate whatever uncertain times they might have.
You know, speaking about the uncertain times that we live in, but the acceleration of digital, and this is an interesting number that I picked up from your earnings call for the last quarter, where you talk about the fact that consumers have spent $1 billion more online in May of this year compared to April, and year-to-date shoppers have spent over $377 billion online. That's a 9% growth year on year. So you believe that despite the uncertainties, despite the inflationary pressures, this is likely to continue, this trend line?
There's no question. The genie is not going back in the bottle in terms of how people engage with customers. And what you're referring to, Shireen, is the third business that we have, which is the digital experience business or the Experience Cloud. And we have this unprecedented view of what people are doing digitally because our business strategy there is enabling businesses to power their businesses digitally. And so the Adobe Digital Index report is an ability for us to aggregate what's happening. And, you know, I think people were always looking at, is the growth accelerating?
Yeah.
But the reality is that more and more of this stuff is happening online. what they were buying changed. And, you know, we have really good insight into what's happening with inflation. And certainly, I think people moved a little bit more towards groceries as well as more, you know, things that they needed for their running of their houses. But I think the trend towards online is just, it's explosive and it's not going to change.
All right, so those are some important comments coming in from stalwart at Silicon Valley, Shantanu Narayan, in conversation with Shireen Bhan. But let's move on. We have the management of Confidence Petroleum waiting by. They reported a mixed set of earnings for the first quarter. The revenue was down, but the margins did expand quarter on quarter. Nitin Khara, who's the CMD of the company, joins in now. Thanks a lot, Nitin, for joining in. I did see your revenues decline by almost 7% in the first quarter. What led to this decline both year on year as well as quarter on quarter? Is demand impacted in the cylinder division? Do you still stick by your double-digit revenue growth guidance for this year?
Yeah, Mangalam. Very good afternoon to you as well as to Sonia and Ekta. Yes, some decline in first quarter definitely due to this war between Ukraine and Russia. Then due to that, the price has gone up slightly. Very big price fluctuation was there. And due to that, some impact was on our sale. But now it is under control. Everything is now fine. COVID, Corona, or war, all effect has been gone out. So this quarter we are doing pretty good, and definitely in coming quarter also we are going to.
Okay, Mr. Khara, you know, I just wanted to touch base with you with regards to your orders, because in the month of June you had some amount of orders that you won, which was worth around 22 odd crores. Have you started executing that? What is the visibility in terms of incremental order wins for you?
Yeah, we are executing that. Now see, this Umred unit, Nagpur unit, has already commissioned. That is CNG cylinder manufacturing plant. You might be aware that we are in LPG as well as in CNG also. We are having LPG cylinder manufacturing plant in different part of the country. Then we are having auto LPG stations also across the country. Plus we are in pack LPG cylinder marketing also. And now we have also started this CNG cylinder manufacturing plant. Our subsidiary Confidence Futuristic has put one new unit in Umred. That is near Nagpur, and it has been commissioned last month. It has been commissioned, all license has been granted. We have also got the order from Tata Motors as well as ICER in this our CNG cylinder manufacturing business.
Okay.
So, and we are hopefully we are doing good in the CNG cylinder manufacturing as well. We are in retail of the CNG station. That is, we have signed one agreement with GAIL. You are aware about that. So that also in fast move now, because COVID, Corona, everything is over. So everything is on track now.
So Mr. Khara, can you tell us what the quantum of that order that you won with Tata's and with Eicher for the CNG cylinders? And what would this do to your overall revenue growth for FY23?
Almost around 300 crores rupees orders we have presently from Tata, Eicher and other OEMs.
Okay.
And this will be completion of this in this financial year only. So we are getting good orders in CNG cylinder manufacturing as well. We are doing good in our LPG also. LPG is now also coming up very quickly. First quarter definitely due to war, as I told, we are unable to touch our figures. But this quarter or in coming quarter, definitely we are doing good. We are
Right. You bought 50% stake in Maruti Koetsu cylinders. What was, how much did you pay for this? And what does this mean in terms of additional revenue geographies for you?
Yeah, we acquired 50% stake in that Maruti Koetsu. And plus in Dahej also we acquired one CNG cylinder manufacturing plant. So altogether our capacity now is around 40,000 cylinder per month. We can manufacture 40,000 cylinder per month. And that's why these OEMs has placed an order with us. And hopefully we will conclude that in this financial year. Yes.
Okay.
How much did you pay for that 50% consideration? Can you tell us?
It's a good deal. I think everything is on open. So I will, yeah, please.
Okay, all right. You're tight-lipped on the amount that you've spent for that particular acquisition. But Mr. Khara, before we wrap up this conversation, just wanted to understand that GAIL is expected to be supplying gas to you all. have you all seen any kind of impact in terms of supplies, and what is the impact on the company considering the high amount of gas prices?
Yes, definitely it's some little bit hike over there. But see, as compared to petrol and diesel, still CNG is much economical, as it's a green fuel also, and we are getting a good supply, good regular supply from the GAIL in our Bangalore stations, particularly all stations which are now we have opened, and we are getting good business also. Day by day, people are converting their vehicles to CNG as well. OEMs also selling their new cars in Bangalore city. So hopefully we will develop this total Bangalore city with our 100 CNG station plant in this coming 2 years.
Okay, all right. We will leave it at that. Thanks a lot for joining in. All the best for the quarters to come. Well, that's Confidence Petroleum. Quite confident, I must say, that they'll complete a lot of their new orders. And they are seeing good demand, especially from OEM players like Tata Motors as well as Eicher Motors for CNG cylinders. Let's do one thing. Let's slip into a quick break. On the other side, Manisha Gupta joins in. She has...
Welcome back, and let's talk about the cotton prices now, which have seen a huge run-up in the last one fortnight itself. For the month of August, actually, we are up by nearly 15% for the August cotton prices. The international markets have been running up as well, trading at a 7-week highs, and we are holding, even with that profit-taking, above 50,000 rupees. When you compare it to the international markets, we are still 20 to 25% on the higher side, so clearly getting uncompetitive when you look at the international markets. And there are reports on how the spinning mills and the textile mills as well are cutting capacity. There are not too many orders in hand, and whatever is coming is really not working out because of the very high cotton prices that we are looking at. Well, the reason that you have high cotton prices, one is that the US crop looks slightly on the weaker side. The Indian sowing numbers, while are 6% higher as compared to the previous year, we are looking at a lower carry forward. The imports have been coming in, but even with that, the holding capacity within the Indian markets has been quite strong, as there is an expectation within the industry that you could be looking at higher cotton prices going forward from here as well. We are now joined by Mr. S. Jagdish Chandran, Secretary of South India Spinners Association. Mr. Chandran, hi, thank you for joining us. What is your sense with the kind of run-up that we've seen in the Indian cotton prices and the view that you could be looking at higher prices even from these levels?
Krishna Jayanti to everyone, to all your viewers. See, the cotton prices, it was actually from the last year, there is a shortfall in the Indian crop size. Instead of 3,50,000 bales, it came down to 3,15,000 bales. So when we requested government to allow the import cotton, duty-free, government also yielded and said, okay, we allow up to September 30th import cotton to pull down the prices. So when the duty was lifted, and we also announced that we will not buy the cotton at more than 1,05,000. So the prices started cooling down. So it came around 80,000. But suddenly, in last 15 days, it has crossed again 1 lakh. The reasons are mainly because the MCX and the MCX and the prices are shooting up with a small quantity, the speculation is going on. So this is the main reason. So that is the main reason. We have to ban the cotton MCX. And we also have to, like China, we have to ban to save the textile industry, particularly small and medium. MNC must not trade the cotton. See, in China, the cotton prices still is around 85,000, and in Pakistan is 75,000 per candy.
Okay.
But in India, the price has gone up more than 1 lakh again. The season is 2 months ahead.
Mr. Chandran, it has been a difficult year, clearly, the 2022 for the cotton as an industry. As a spinning mill association, have you been in conversation with the government? What is the impact that we've seen on the spinning mills itself, the profitability, the kind of capacity cuts that you've had to see?
See, we have represented to government to stop the trading MCX and ban the MNC. And see, the mills as of now are making huge loss around 40 to 50 rupees per kg. Because of the Indian high cotton prices, yarn prices also higher. Because of yarn prices higher, the exporters are not able to take export orders. They are dried up with the orders. They are waiting the prices to come down. So these marketers are shifting to Bangladesh, where the China is pushing the yarn with the much lower prices, and Bangladesh is getting higher orders, export orders. Our Indian exporters are not able to get the orders. So because of Indian exporters are not able to get the orders, we are not able to get the yarn prices. So we have cut down the production by 50%, and 25 mills are on the verge of closing also. So it is a very pathetic situation for particularly small and medium spinners. You know, because when the government allowed for import of the cotton, small and medium spinners are not in a position to import the cotton in the short span of time because the inavailability of the funds and infrastructure and the quantum they have to import. So these are the struggles we are facing. If the situation continues for some more time, even the next year also, by next year I think all the small and medium spinners will vanish from Indian market. So we request government to immediately to ban, at least to save the industry from for the future, to ban MCX and MNC from trading the cotton.
Mr. Chandran, that point well taken. You clearly are talking about southern part of India right now. Is that the case across India?
Southern part of India is the main cotton consumption unit.
Right.
See, out of India, it's about 70% is consumed in southern part of India only. Polyester and viscose is only mainly is going in the Madhya Pradesh and Gujarat and all. Cotton is the growing area, maybe Gujarat, Madhya Pradesh. Consumption is mainly in southern part of India.
Clearly. And, as you were mentioning that imports are coming into India, but you're saying that the smaller and medium-sized spinning mills are not being able to take part into that.
Sure.
The other point I want to make is that, we've been talking to a lot of people in industry and they tell us that this pain perhaps could continue just another 1 month. By the end of September, as cotton arrivals start picking up, we will perhaps see prices come down. What, according to you, is the kind of arrivals that can be expected? And two, what is, according to you, a fair value of Indian cotton?
See, last year itself, the same situation started.
Okay.
In the cotton new season will come, the price will come down. But automatically, when the prices, when the new season came, prices started growing. And the export also cotton was allowed. So we don't know, still the cotton is in the very initial stages. So it's because it is an agri product, we have to see the climate, how the rainfall behaves. A lot of things are involved with that. So we request the government not to, if everything goes good, the rain is good, the climate is good, there is no excess rainfall or short rainfall, maybe the cotton may be good size, but we don't know. So we request the government to not to allow any exports till what we have the output of the cotton. After getting the real picture, last time they said the same 350, but end of the season they said 315. So the 35 lakh bales was the shortage. But already 40 lakhs bales been exported. So traders started hoarding. MNC started hoarding the cotton.
Right.
So same situation may continue this year also. So not to get trapped in the situation, we have to wait till the cotton season comes out fully.
Okay.
So the weather conditions are very important, plays a major role in this season.
Absolutely, Mr. Chandran. We take your point, and there are concerns, yes, because the Indian cotton prices have gained up by 15% just in the month of August. As pointed out, we are nearly 20% higher than the international cotton prices. And as Mr. Chandran was pointing out, many of the southern India spinner mills are working at 50% capacity, some 25 mills at the verge of shutdown as well. So clearly not a very strong picture there. But with that, that's all the time that we have on Halftime Report. Stay tuned. Business Lunch will take all the action forward.